Welcome back to RETV. We're on the Real Estate Roundtable, and joining us once again, she was with us earlier in the show talking about real estate. Here she is with us again to talk about life insurance. Krystal Cologne, thank you so much for joining us.
Thank you for having me.
Now, I got to ask you before we get into it, this just came to me right now. Have you ever had somebody that you were either selling life insurance to that you ended up selling a home to, or vice versa, that you've been able to cross over both your customers?
Yes. So what's funny is that I also sell mortgage protection, which is a way if you were to pass away and you owned a home, we would end up paying the rest of your mortgage off. So say you owe $300,000 on your home, you would get that mortgage protection component of the life insurance policy added to your policy. So it's a great way to make sure that in the event of, sometimes the person who the home is under is the breadwinner. So maybe they pay the mortgage. So if someone in that example, for that position, were to pass away, that mortgage protection would come into place to make sure that his spouse or her spouse and their children don't have to be relocated or moved, because the mortgage protection will pay off the rest of their mortgage. So that's a benefit of having my real estate clients also get life insurance. Sure. And then on the flip side, when I speak to someone, I also let them know that I'm a real estate agent. And, a lot of times like, I've been thinking about purchasing a home. So I have met with 3 clients outside of life insurance within the past 3 months that have been looking for a home as well. So, it's really good. Yeah.
Good for you. A lot of cross-marketing opportunities.
Exactly.
Awesome. So you told us a story about real estate. Your mom used to watch HGTV, and here you are today, right? Mm-hmm. Giving HGTV way too much credit, but that's okay. Talk about how you got into life insurance.
Life insurance was just a fluke. I just saw an ad pop up, and I believe actually it was on Craigslist. And then I reached out to the person because I wanted to be able to work from home, because I do have a 17-month-old daughter. And, real estate, I have to go show houses, hold open houses. And I don't, my daughter's not in daycare. I don't want to put her in daycare. So I wanted to find something that was work from home. So it said work from home, life insurance agent. I reached out to them, and the rest is history. I fell in love.
Good for you. Good for you.
Thank you.
Talk about life insurance. So life insurance, and I read on one of your posts recently that, everybody, it's one of those things that nobody wants to talk about, but that everybody at some point has to deal with. Like you and I talked about earlier, it's a fact of life that at some point we're all gonna pass on. Not a pleasant thing, but it's life. Exactly. Right? So talk about at what point a person should really start looking at and getting life insurance, and how they should go about figuring out which life insurance plan is the best for them. I know you have term life, you have whole life, and just kind of give us a lay of the landscape of when's a good time to start thinking about getting life insurance, or when's the best time. I suppose there's never a bad time. Yeah. And then secondly, what type of product is what they should be? How should they determine what type of product would be best for them?
So the best time to get life insurance is today. It's always best. You'll never be younger than you are at this very moment. So that's the best time to get life insurance. Your premiums correlate with your age. So if you are a 25-year-old male, your premium would be given to you based off of 25-year-old male. If you are a 45-year-old male, your premium would be based off of that age. So it's always best to get life insurance when you're young and when you're healthy. If you wait, say 10 years, and then you develop some medical issue, and now all of a sudden, hey, now I have this medical issue, I want life insurance. You may, 1, no longer qualify for life insurance. And then 2, you may be rated. So it means even if you do qualify, your premium would be much more expensive than an average person your age. So I believe like now's the best time. The younger you are, the better. Your premium, if you get whole life, your premium would be locked in for your entire life. And then you also have more benefits. So if you get whole life, you have more time to accrue cash value, which, in turn you can borrow from, have investments, purchase homes, buy cars. So there's no better time than now.
So you talked a bit about there's whole life and there's term. What are the main differences between the two?
So it's kind of cheesy, but I always use this because I'm a realtor. So, term is like you're in an apartment. You have that apartment for a certain amount of time. Once you leave that apartment, you don't leave with anything. You don't leave with any money except maybe your security deposit back. but you don't leave with any, like you haven't built up anything. You were paying the landlord's mortgage the entire time, and now you have to start all over from scratch. So term is the same way. So term, you can have a 10-year term, 20-year term, 30-year term, whatever it may be. But when that term finishes, now you have to get a premium quoted at your new age. So if you say you had an apartment for 10 years and you were paying $1,000 a month, and then the landlord sells that home, and then you go into another apartment, and now because of inflation and the rates are higher, now you're paying $2,300 a month for a 1-bedroom apartment. That's the same kind of thing with term. You have a low rate. A lot of people are like, oh, well, I'll get term because I get a much higher amount for a much lower rate. But the odds of you passing away during that term are very slim to none. And then when you do need more life insurance again, your quote is going to be a lot higher. So, a lot of people, due to your age. So whole life is kind of like you purchase a home. So you bought a home, you're building cash value to it. So you're accruing cash value. And it's the same thing like with equity. So when you buy a home, you have equity in the house, you can take money out, buy a new an investment property with that equity. But you're left with something. And whole life is the same way. You can, borrow from it. There's other benefits to whole life that you don't get with term life. And then your rate is locked in for your entire life. So that rate that you get is not going to change when you're 45. It's not going to change when you're 65. It's not going to change when you're 75. It'll remain the same from the day that you got the policy.
And it continues to accrue cash value.
Exactly. Yes.
And are you borrowing when you accrue that cash value, and then you need to, you're in a situation where maybe you need to pull some of that cash out? Is that a loan? How does that work as far as how the money's allocated?
It's a loan, but not in terms as most people would think of a loan. Like I have to go to, a bank and ask to get a loan, and that's based off my credit score. The money that's accrued in there is not based off your credit score. They're not gonna, it's tied to your name. You're not gonna be asked any questions. They're not gonna say, hey, your credit score is too low, we can't give you this money. So in that way, it's not a loan, but you do borrow from it. So you would, say you have a pot of $50,000 and you want to borrow $25,000 from it. So you're gonna, there's gonna be interest on that $25,000 until you pay it back. You can, however, decide not to pay it back at all, and then they'll just take it off your face amount. So if you have a $100,000 policy and you borrow $25,000, when you pass away, your family would get the $100,000 minus the 25 minus the interest. Yeah, so your family will still be left with something. You were able to use that policy while you're alive and living. So life insurance isn't only for when you pass away. If you get whole life, it's something that you can benefit from while you're living as well.
Gotcha. Any idea what the interest is? I don't want to put you on the spot. Our interest rate?
Yeah, it's about 4.5% to 5% that it's accruing at. But even when you borrow money, your premium is still accruing. When you pay it back, you're paying it back at like 8%, about 8%, 7.5% to 8%. But you're still accruing.
As you continue to pay into it, the cash keeps accruing.
Yeah, so it's still accruing. So it ends up to be like 3% that you're borrowing, that you get the interest rate.
Net rate. Gotcha.
Exactly.
Gotcha. Awesome. And so it sounds to me like you feel like whole life is probably for someone that's looking for a long-term policy is going to be the better way to go.
Exactly. Right? Yeah.
And how do they determine the right amount of insurance to get? I know that's a big question people ask a lot, is how do I determine what's the right amount of coverage to get to make sure I'm protecting my family? So in the unfortunate event that someone passes on, that there's enough money in the policy to cover whatever it is that they're looking to do.
So just like purchasing a home isn't one size fits all. Life insurance isn't one size fits all either, because you may be a 21-year-old, person. You have no kids, and you have basically no responsibilities. You can still live at home with your parents, but you want to make sure that you have something to borrow from in the future. So a 21-year-old may get a policy where they're just focused on building up, cash value to borrow from in the future. However, if a 21-year-old has 3 children and has a wife, they may need a different type of policy, as well as, if they have a house, they have to have mortgage protection. So it's kind of based on what you want to leave, the people that are going to be your survivors, the surviving beneficiaries. So if you have 3 children, you want to make sure you're not just leaving behind $10,000, because that's not going to get them very far.
Right.
But if you're a 21-year-old kid and you get a $20,000 policy, make sure you cover your, your funeral and leave your mom behind $10,000. That's a plus. So it all depends. It's always not one. I mean, there's never one size fits all. And then I also say we work with your budget. So, if you tell me, hey, Krystal, I can spare $75 a month. And I want to make sure that you can live every day. We want to make sure you're not struggling, but I want to make sure also that you're putting away something for the future or putting it into a life insurance policy. So if you say you can work with $75 a month, we'll get you I call it the foot in the door policy. We'll get you a policy, make sure that you're covered now while you're healthy. And then if you get a pay raise, if you come into some money, in the future, you can always add on to your policy. You can add on in 2 months, you can add on in 2 weeks, you can add on at any time. So it's always best to make sure that you are not struggling to pay for your life insurance, but you're making sure that you're protecting your loved one's future.
And finally, when it comes to life insurance, as hopefully your financial situation is growing, can you add on to that policy, increase the amount of coverage as time goes on?
Correct. You can, as long as you have a policy with us, you can always add on to that policy. I do want to say that there are certain riders that are in place that if you were to get a medical issue, or have a medical disease and you were diagnosed with something, that there's like a rider between certain ages that no matter what your medical issues are. So you're approved for life insurance, but down the line you develop a serious medical condition. A lot of times you wouldn't be able to add in any more coverage, but with certain riders that we have, you're allowed to add on. I call it the get out of jail free card. It's kind of like no matter what's going on in your life, you don't have to do a medical exam at that time. You don't have to check with your doctor. You are able to add on additional money to your policy. But if you are a healthy person, there's no issues, you can add on at any time. So I believe that, life insurance is something that is a benefit for people to have. And it's a way to build generational wealth. So I just wish more people were taught about this in school. I wish we were, educated on finances and educated on life insurance and purchasing real estate and credit score, because it's just something that can take us so far.
Okay. Krystal Cologne. This girl's got it all. Covers you on real estate. She covers you on life insurance. So let me ask you real quick. So you're in New Jersey.
Correct.
Okay. We won't ask you why you're in New Jersey, but that's fine. So,
I was born here.
Are you a sports fan? Oh, you were born there?
Yeah.
Okay. Are you a sports fan?
I love sports. I always played sports. I played basketball and baseball when I was younger. I used to go to the park and play football with the boys.
Oh, wow.
Yeah, I've always been like I don't know, I guess a tomboy, but at the same time I was a cheerleader. It's weird. So I love sports. The Giants are my favorite football team.
Good thing we asked you that at the end of the interview, not the beginning. Okay, so the Giants are your favorite football team. So hopefully they were better last year, right?
Uh-huh.
Okay. And how about basketball?
Basketball, I love the Lakers. I always love the Lakers. My team, when Jordan was playing, it used to be the Bulls, and then it became Miami, and then it became the Lakers. So, and I'm just
so you're a front runner. Let's just call it what it is. You're a front.
No.
Okay.
No, I don't know.
You like Jordan. It sounds like you follow LeBron, right? Okay. Listen, LeBron brought us 2 titles down here in Miami, so I have nothing but love for LeBron. Wish he might have stayed a little longer, but we'll save that for another day. And now he's with the Lakers, and the Lakers are a formidable threat this year. Exactly. I think a lot of people are underestimating the Lakers.
Yeah.
All right. Krystal, thank you so much for joining us. We're going to put all of your contact information on our website, which is retvonline.com. But real quickly, go ahead and just give information if somebody wants to reach you, the best way to do so.
So the best way to get in contact with me would be, the easiest way is just on Instagram. I am Krystal Cologne. That's Krystal with a K, Cologne, Colon. You can, just DM me, or you can click the link in my bio to reach out to me directly, or via email. So that would be the easiest way to get in contact with me.
And you can reach out to us. Like I said, we'll have all your information on our website. I have a very sneaking suspicion that you'll be seeing a lot more of Krystal Cologne on RETV. Okay, but thank you so much for such great information today, and we look forward to speaking with you again soon.
My pleasure, Steve. Thank you so much for having me. I look forward to coming back.
Likewise. Thanks, Krystal.